Psalm chapter 23, verse 4. Psalm chapter 23, verse 4. Even though I walk through the valley of the shadow of death, I will fear no evil, for you are with me. Your rod and your staff, they comfort me. Matthew chapter 11, verses 28 to 30. Come to me, all who labor and are heavy laden, and I will give you rest. Take my yoke upon you, and learn from me, for I am gentle and lowly in heart, and you will find rest for your souls. For my yoke is easy, and my burden is light. Psalm chapter 119, verse 76. Let your steadfast love comfort me, according to your promise to your servant.
Good morning, everyone. Can you hear me? Make sure y'all can hear me real quick. Loud and clear. All right. Appreciate you, Fritz. Morning, Tony. Morning, Maddie. All right. Well, hopefully you guys have had a good weekend so far. We have a kind of slow, chaotic week ahead, probably. Those of you that have been here for a while or that have watched ICT's concepts for a long time, CPI, NFP, rate announcements, FOMC, holidays, right? Day before, day of, day after a holiday. All those times generally can bring a little bit harder condition. We are almost to the end of this month as well, so we'll kind of look at some of the monthly things as well. But yeah, so because CPI is later and there's literally no news up until Thursday, we may see some slower, low probability type of delivery. Sunday is generally low probability, right? We don't ever trade Sunday. Monday, that's part of the consolidation manipulation within the weekly range. Tuesday, Wednesday can potentially leave us with the higher low of the week, depending on bias or narrative, wherever it's going. And then Thursday, Friday, a lot of times can present us with the reversal for the week, especially if the start of the week was aggressive. Something you want to consider too, when there's no news like this and the news event comes later, right, in the week, we may see Monday, Tuesday, Wednesday slow. If we do see that, Thursday and Friday are going to be very dynamic. So that's something you can count on if you see the week very slow, leading up to the end of the week, like Thursday and Friday, especially when there's a news schedule like this. We could see that the news is spread out all throughout the Friday time. So we may see CPI give an initial reaction, right? One-sided delivery, because that's what CPI does. Generally, that's one-sided. So it'll have a liquidity pool, and it'll target that aggressively. And then, of course, once it hits that, especially if there's a spread-out news environment like this, that whole entire run that's created with CPI, you may be able to anticipate getting overlapped again, right? Because you can just imagine if you were smart money and you had a tool like this that you could use, and CPI having the characteristic that it has, being the one-sided news event that it is, it would make sense for smart money to pull back against that, because everybody will chase this move, not knowing that these other moves that are coming later may be used as the reverse, right? Then again, it could also, just keep ripping higher or lower, depending on whatever it's trying to do. But I do believe that this is going to be very impactful. Core pricing index, CPI. It's definitely, it's consumer price index. My bad. So it tells you kind of like how the consumer feels in the economy, right, about things. We'll see what's gonna happen with that. But again, it's always one-sided for the most part. Generally, it's one-sided, and then of course NFP, FOMC. Those are two-stage events, especially if there's like a split like this, right? Say it's NFP up here, and then there's 1, 2, maybe even 3 events that come after. It could be the initial move that takes place, and then the real one comes later on beyond the open. So those are some of the characteristics we're going to look out for, specifically for CPI this week, and then of course NFP, CPI, or NFP and FOMC. You want to write down those characteristics I just shared with you. All right, so yeah, if we're considering what the potential weekly profile could look like, here, let me pull this up real quick. Share some profiles with you guys. If I could pull Discord up. My computer's been a little bit slow this morning for whatever reason. Hopefully that irons itself out. Luckily y'all can hear me and see things okay. But yeah, so let's go to... So I want to pull this weekly profile up because a lot of you guys probably haven't seen it when it comes to a slow start of the week, and then what the possible profile could look like if the start of the week ends up going kind of slow to start things off. Yeah, let me see. So this is a possibility. Consolidates Monday through Wednesday, then runs an intra-week low. This is to go higher, right? And then basically forms a market reversal. This low, what could that be? That could be previous day's low. That could be Monday's low. That could be Friday's low, right? That could be a session low from the previous day, right? It really just depends. Like this could be the previous AM session low going into Thursday, right? And then, it could just be bouncing back and forth, so on and so forth. But this is something, you want to, when you do get the chance to, maybe a little bit further along in your studies, you definitely want to consider daily, weekly profiles. You want to at least have them screenshotted like this so you can refer to them every week. I always look at what the week could potentially look like based on the news. It gives you kind of like an anticipation that you can have for, what the week could potentially look like. And come on, buddy. Sorry, my dog just barged into my room. But yeah, this can give you kind of like an anticipation, right? And a lot of this is anticipating, right? Some people say not to predict the future. Why are these things called futures? Because you have to predict the future, right? It's what's going to be happening in the future, right? So hence the name makes sense. So anyone saying that you can't predict or shouldn't predict the future, as ICT has said before, I mean, it's kind of like, what are you doing? Right? If you're in a trade, you're predicting it's going to go higher or lower. So what are you talking about? You shouldn't predict where price is going to go. Let's just react to price. No, you predict based on the things that we go over and the stuff that ICT teaches. Part of that prediction and anticipation can be achieved by having these weekly profiles committed to memory. They have daily profiles as well. We could get into that too if you guys want. but yeah, for Sunday calls, right? You want to make sure that you're absolutely paying attention to the overall weekly profiles and kind of what that could be. It's just a good baseline to start the week. And of course, you take this, and then you also merge that with what news is happening. There's many profiles. I think there's like 7, if I'm not mistaken. But specifically for this news, or this news schedule, this is what we're going to kind of focus on. Consolidation, slow, low probability delivery going into the rest of the start of the week, and then big time action taking place. Maybe a reversal, maybe full continuation to the upside. Going into Thursday or Friday. Okay. You also, of course, you want to pay attention to the PD arrays that are around us when we get to this point. I've said this before as well about the news for those that may not know or maybe new to this channel and how we do things. Most people don't realize when ICT says that the news can be a schedule tool. Most people don't realize that on the higher time frame, just like how in the lower time frame we need institutional sponsorship being a news event, for higher time frame moves to take place, for them to have institutional sponsorship, for them to make those big moves on that higher time frame to a PD array or away from a PD array, to a specific liquidity pool, it's going to require a news event. So you can utilize these news schedules and these events when you're looking at the higher time frame as a macro, like kind of like a perspective of a macro on a lower time frame, right? Those little moments in time that price spools or runs towards liquidity. You can somewhat use the news events to frame out when a higher time frame move could take place from a higher time frame PD array or to a higher time frame PD array. There may be news that begins like high impact news on Monday going into Wednesday, right? That pushes price into a particular level, right? On the higher time frame, maybe a daily order block, daily bullish order block, right? For example. Once it gets into that, if Thursday and Friday have a heavy news event like CPI or whatever else, the 2 news events that were the biggest during the week could be the catalyst that pushed price to a PD array, one that you're looking to see a reaction from. And then the last one could be the one that sets the move up towards the narrative you're looking for, away from the PD array. Right, so this is a perspective I don't hear anybody talking about when it comes to the news other than ICT, who also doesn't really come out and say it just like I just said it. He kind of just like umbrella terms it, right? It says, it's a scheduling tool. Okay, well, what are the details to that? Like, how can I get more detailed with that? And if you take what I've just mentioned and you go study it, it's one of those aha moments. It's like a light bulb that just goes off like, oh, snap, that's a way that I can use the news. In a more effective, more dynamic way. Okay. So, weekly profiles, consider that, right? We're going to look to see if the end of the week, right, can give us the speed. We're going to also consider the fact that the news schedule can act as a macro, right? Or similar to a macro in the lower time frame, but just for the higher time frame. And it could be a time when you could learn how to frame when setups are going to take place when you're looking at those larger time frames. Okay. So again, this is why we start here, and these are just some further conceptual ideas related to the news that I want you guys to always be considering when you start a new week. Okay. So yeah, with that being said, hopefully, before we move on, do you guys have any questions about any of that stuff? Where can we find weekly profiles? You could find them inside ICT's 2016 mentorship. If you haven't got to that point, I highly advise you to go through the steps, that like the process, and not to jump around. I was talking to a student yesterday about jumping around because it may feel like there's so much information. I just want to know, what's going to give me in a trade, or whatever the objective will be for that student. But the problem is, if you jump around too much and you're getting ragdolled to different opinions and different concepts before other concepts are learned, it's like going from elementary school trying to then be a surgeon within 6 months, right? Like you're a toddler trying to be a college graduate that has 10 years experience all of a sudden knowing how to use all the tools and all the intricate details that lead to one another, it becomes rough, right? Obviously, weekly profiles is one of those things that you could jump to just to get the screenshots. I think I have them in my private group. I may have them in the free group as well. But again, it's one of those things that's like super available. You definitely want to go check that out if you feel comfortable. I could say that if you've been studying ICT's concepts for more than 6 months or a year, it's not going to be too rough. If you understand weekly ranges and daily ranges, it won't really be too much of a concern. It won't mess you up too badly, if at all. But if you haven't finished like the 2022 mentorship, if you haven't finished or if you haven't spent at least 6 months digging into this stuff, I mean, it's going to do you no favors. It's not a be all end all, and you have to have a lot of back testing with it as well. Like today, I painted a scenario that may lead to a specific profile, right? But if you don't know about this and you just go in assuming like, oh, well, what if this happens and what if this happens? It's gonna, again, it's not gonna do you any favors. Nothing is a be all end all, but it's just good over time for you to look at these things when you get to that point. To be able to merge things together, right? Like I said, this type of profile that I talked about, right? This, what the hell's happening? This profile here, okay? There has to be a PD array down below, right? There has to be a reason for it to want to dig lower into something that's going to react, right? So if you're not familiar with how to structure that, right? These just look like little squiggly lines on a chart with, days of the week, right? Each day of the week has its own characteristic within the weekly range, right? So these profiles merge with that understanding as well. Same with the daily range, right? Each session has its own characteristic within the daily range, right? Each daily candle. And the daily profiles slap right on top of those characteristics. And you have to, you got to spend some time digging into those conceptual ideas. And of course, I can make a whole, lesson about that, and we could talk about a bunch of different stuff related to that. But maybe we can get into that a little bit later. But these are just some ideas I want you to get exposed to and think about. If you haven't spent a lot of time with ICT's 2016 stuff, no matter who you learn from, it's best to absolutely still be going through stuff. Even if someone you're listening to has a course or whatever, or claims they're this or claims they're that, I never tell my students to just solely focus on only the things that I say. There's a prerequisite. If you watch ICT's concepts, the 2022 model and the 2016 stuff, you've now been introduced to the language, right? And so you're now moved a little bit further along basic wise, right? In terms of the basics. So then I can come in and connect a lot of the dots, right? As a mentor, and then kind of help speed up the development process rather than me reteaching all of ICT's stuff when it's readily available. It's more of a let's push the student faster through their development of the concepts that have already been provided. Share some of my wisdom and the things that I've learned over the years, and then try to piece things together for you guys so there's less confusion, and you can be taken from confusion to clarity, right? That's kind of like the lingo here, taking students from confusion to clarity in the world of smart money concepts, right? ICT concepts. So yeah, I encourage every one of you, even if you like what I do and, see that I know what's going on and I can call the market, I literally do it every week, every month, every day, pretty much in my private group. But that does not take away from the fact that I will still be pushing you guys in to doing some prerequisite work, which has to do with studying 2022 stuff to get a model if you don't have one, and get a rough foundation. And then the 2016 stuff, along with live calls that I do, because I'm implementing everything that you learn, similar to, the way that ICT does his live calls. He's just piecing it all together live, and you're hovering over someone that knows what they're doing, and it just kind of helps connect a lot of the dots, especially if you can have access to someone like, I make myself accessible, one-on-ones or just private calls every day, or, even a couple times here on YouTube. That stuff has clearly helped, for example, students like Tony and many others, pass funded accounts, give more clarity, so on and so forth. Yeah, let me see. Matthew said he talks about higher time frame to lower time frame from a daily all the way down to the 1 minute. Yeah, absolutely. Weekly data ranges are discussed. Yeah, they're definitely introduced in the 2022 stuff. But I mean that's the thing. Like everyone's looking for a fast track. Like how can I not go watch any of ICT's videos because he's boring, right? Like how can I just skip past all that? And honestly, anyone that's not telling you to go do that type of prerequisite work and just focus on their course that only cherry picks certain ideas that are, kind of fun to look at, I mean, you're doing yourself a disservice. Remember, what we are doing as ICT traders is basically trying to understand an extremely complex algorithm and algorithmic principles in a language that is a little bit easier to understand. But that doesn't mean that there's going to be one concept or one tactic or one thing that's going to make all of the complexities defined to a black and white, 1, 2, 3 type of process with nothing else. Like as a smart money trader, as a trader in general, you have a layered understanding. And if you see people coming out here like I do, like ICT does, like people like JadeCap do, and a handful of others that are absolutely dynamic and prove it, they have a layered understanding, but they've obviously simplified in some ways. But the back end information that they've learned over the years that they've put into it has layered their opinions and skill set in a way that makes it look, to the naked eye, to the uninitiated, makes it look very, very simple. Like it's just, he just looks for this and looks for that and he gets in and he makes $1 million. And that's just not the case. A surgeon may make things look easy. They get in there, do a surgery in 5 minutes or 45 minutes and bang. Does that mean that it's an easy process? For them to have gotten to where they're at, is that an easy process, do you think, just because they're able to be effective and do it quickly? Absolutely not. What we are doing here in the markets, trading these concepts, is surgical. We're like surgeons, right? We're like snipers, right? Being a sniper, there's a lot of things that go into it. You got to be able to, mess with the scope properly, account for bullet drop and all the different complexities that come with like range and the calculations needed. But they take the shot and they make it look easy to the naked eye, to someone that doesn't understand, right, how this stuff works. It's the same exact thing in trading. So those are good analogies, to how you need to start thinking about this stuff. I do simplify things a lot. Those of you that spend a lot of time here, it gets easier quickly. It gets more, the clarity starts to just flood into you because of the things that we focus on. But the conceptual ideas, right, you got to spend time studying them, or at least having someone else explain it to you so you can go ahead and study it in an effective way, But of course, like I said, things like this, a lot of this stuff that's in ICT's 2016 stuff, he's breaking down a language. The course, which is why ICT didn't really care that his stuff got leaked, the course itself is not the mentorship. The course is explaining the language. Okay? When you're with someone that's walking over the chart, applying the information, willing to show you, right, and real time doing it day to day to day, that is the mentorship. That's why, what ICT's been doing the last couple of years has been pretty solid for a lot of people. Some of us don't need any more, right? And eventually you want to get to the point where you feel like you don't need any more either. I don't use every concept. JadeCap and all the others that you see that have big followings that are really good, they don't use every single concept. They don't use, all these different things. They know about most of this stuff, right? Like all the PD arrays that have been introduced and, they have their favorites and whatnot, but they have a select amount of things that they make decisions on. The rest of the stuff is all supportive ideas. Okay? You're not going to use every concept, every tactic. You got to make sure that early on you listen to that advice, because it's very easy to get lost and overwhelmed and think that, oh my gosh, this is too complicated for me, or this is going to be too hard, and all these negative things, when in reality those thousands of videos, well, almost 1,000 videos, probably like 10% of it you're going to actually use on a day-to-day basis. It's not going to be, you're not going to be this like you may be a library of information, you may know a lot of stuff, but when it comes to making decisions, you have to keep it narrowed. And that's kind of, or that is exactly what me and many of the people that are in this community in the ICT army that succeed, that's what we have a commonality in. Okay. And again, that's advice that I heard early on, but I didn't accept it. So I was obsessively looking at everything I possibly could, which, it's good because I got introduced to pretty much everything and I understand the gist of everything, or most of it, right? But again, you're going to have these select things that you decide to gravitate to, and that's what you're going to stick with, so don't be overwhelmed by the amount of information that you see, and again, a good prerequisite, no matter who you're learning from, whether it's me, if you like the way I teach, right, or things that I share, or if it's somebody else, make sure you do yourself a favor and go through the prerequisites, which is the 2022 model if you don't have a model and you're completely brand new, and the 2016 stuff. You want to make sure you're paying attention to, right? And if you're listening to someone else outside of ICT, they better be giving you access to go live with them. They better be able to walk you over the chart. If they can't, there's too many options available that allow for that, for you to not take that type of opportunity. Whether it's with me or whether it's with someone else that offers that type of access. You do yourself a disservice if the person you're listening to can't even come out here and do it live. They don't have to trade in front of you, show exits and entries and all that. They should show the arrows at least, right? Like we call the market live and show entries ever taken and prove their live accounts. So, and there's, I'm not the only one, obviously. There's a good handful of people that do that stuff. But again, make sure you're not just going with someone because they have a pretty looking course, okay? Or just show you screenshots. Like all that stuff is ridiculous, okay? There has to be proof. ICT has raised the bar. If you can't come out here and prove it, get the hell off the internet because you're not worth listening to, okay? That's how you should feel towards a lot of these people on the internet, right? Claiming this and claiming that. It's very important because, you can easily get hurt and manipulated and fooled. And I don't want to see that. I've been a victim to that. I'm sure a lot of you have been a victim to that. And if I can do my part in stepping in front of that and at least putting the seed in your mind to pay attention to this and set your bar higher for the people you listen to, then I think I'm doing a service to those of you that do lend me your ear, even if I'm not the main person you're listening to, So yeah, so hopefully that helps some of you, especially those of you that are really, really new and maybe having a basket of mentors that you're listening to in this community or in this, army of ICT traders. I wish someone came out and told me that type of stuff. That's kind of why I'm mentioning it. Would have saved me a lot of money, a lot of heartache, a lot of hopelessness at first. It was needless hopelessness, right? So yeah, like I said, we got this Thursday profile. Take a screenshot of that. We're going to see if that's going to be something we're going to look at given the news, right? Because Monday, Tuesday, Wednesday, there's no news. When there's no news, there's low probability, right? The expectation is, does that mean that it's going to 100% all the time not deliver anything when there's no news? No. It's always probability. Okay, so just keep that in mind, right? Nothing's a be-all, end-all, and we'll keep that in mind and watch and see what this week is going to do. And when we get into the indices, you'll see that we're kind of in a range. So, maybe that's going to be something that we're going to get stuck in for a while. But obviously, we're just going to have to wait and see what transpires. Okay. But yeah, so that's the news. Let me take a screenshot of this real quick. Send that to the private group later. So yeah, we'll get into our very first asset that we generally look at. So let me ask you guys a question, just a review question for those of you that always hop on with me or maybe new and haven't heard this before. What does the bond yields, that being this group of assets here, right? What did the bond yields impact positively? Do you guys remember? Just toss it in the chat when you have the answer, or if you have the answer. The bond yields. What positively follows the bond yields? Yeah, Chawezi, good morning, by the way. And yeah, exactly, Tyler, Chawezi. The bond yields influence the DXY positively. Okay, so if this goes lower or if this goes higher, we want to see the DXY, if it's correlated, right? If we're in a symmetrical, high probability, market in terms of risk on, risk off, we want to see the DXY follow the yields, right? We want to see the yields impact positively what the DXY is going to do, okay? And when there's not a correlation, your very first indication of high probability conditions, clean, easy to trade conditions, is if we can see things correlated, right? In terms of risk on, risk off. So if the relationships between risk on and risk off are not in sync, you're in low probability. Right? Just automatically, you want to consider that. So in a lack of symmetry in the market is present, you have to lower your risk. If you're taking my advice, if you want my advice and how I do things, right? This is how I view things. Does that mean that I have, like the smallest risk possible? No, it doesn't, it doesn't mean that. I'm not going to risk like 0.25% because markets aren't symmetrical. I'll probably just drop it 0.25%. If I'm risking 1%, it'll go to 0.75%. If other things line up showing me that, there's even more low probability signatures, like we're in consolidation, for example, I may drop it down to 0.5%. And then just kind of go from there and see how the week transpires up until we can get outside of this lack of symmetry or lack of a trending environment. Okay, so that's kind of how I would go about things if I see a cracking correlation, which we kind of see here a little bit, right? We did for a little bit, but now it looks like we may be getting in line. Okay, and when we talk about the DXY, we'll jump back into that and dig a little bit deeper. But yeah, so since we all understand what correlation this has, right, and what this impacts, and how we can use this in our analysis by coupling it with what the DXY is doing, we can now dig into what price is doing here, right? So again, once we figure out the symmetrical characteristics and whether it is or isn't symmetrical, and we jump to the higher time frame, those of you that have been here for a while, for those that have maybe just joined, what is the next first thing that we do? So we go from the news, then we check symmetry, and then what's the first thing that we want to mark up on our chart? Here, I'm going to actually remove everything so you can't see anything. Oh, I don't think it gave the answers away. Yeah, what's the very first thing? For any market that we look at, right? When we go to the higher time frame, what's the very first thing? Higher time frame highs and lows. Which one's specific? Last week's high and last week's low. Yeah. Current candle. Chawezi and Tony, you got it right on the nail, right on the head, right? You want the range that's the most important, or liquidity that's the most important, is going to be the current or the previous high and low. Because that's what? The previous week's high, previous week's low. Okay? Oh, man, it's going to do this. See that when I click on it, it doesn't pull up the damn thing. It doesn't let me edit it. I don't know why it does that. It's just kind of laggy, I guess. Oh, man. Sorry about that. You see how it's loading? I don't know what's happening. There we go. I don't know why it's been doing that. It's been doing that all morning. I've been trying to fix it before the call, but I guess, yeah, I'm not too sure what's happening. But yeah, so we take that. It's previous week's high. Clone that. We got previous week's low. Okay. So can you guys tell me why this is important? Why is this important? The previous week's high and previous week's low, when we're looking at the weekly chart, why is this high and that low important, right? Regardless of which direction it's going to go, right? Obviously, you could build context for why which one's more important and so on and so forth, but why would this high and this low be important in terms of liquidity, right? Near-term liquidity, narrowing down the range to focus on. Exactly, Chawezi. Exactly. We're narrowing the range where the liquidity is, right? Where is the most important things? Because if it opens up here, which it's going to do, because this is the close from last week, whether it's going to target buy side and come up here and upset any of this, or whether it's going to dig down below this low, the next weekly candle is going to have to violate this range. So whether we're reaching down to this low over here, or if we're reaching up to these highs or this fair value gap or even this high, this has to be taken out first from this weekly perspective. So this previous week's high and low, when price opens up into it to start the week, next week's delivery, what next week's delivery is going to have to break through first before it does any of these extremes, right, up here or down here. These pools of liquidity need to get violated, right? Because the next candle is going to open up, and in order for it to get down here, it needs to break through this low. In order for this to go higher up here, to reach up into here, or reach up into here, or reach into this, it's going to have to break through this high to do that type of movement. Because this is the weekly chart, hopefully you guys can see how this perspective, right, can help you see which liquidity is most important when you start from the weekly chart. Okay, no matter if you're trying to dig down here and you're bearish, or if you're trying to dig up here because you're bullish, right? The conceptual ideas leading to whether it's going to go higher or lower overall is we're kind of putting that to the side right here and kind of focusing on why this current candle in the previous week's high and low and that range, why that's so important when we start the week, and why it's one of the first things that we want to map out on our chart, whether it's you mapping it out on your chart or writing it down on a piece of paper, just so you know what that is. Hopefully that is understood as far as why it's important to start there and why looking at that is so important. All right, so yeah, hopefully that makes sense. Let me see. It shows where. Yeah, so volume doesn't really have anything to do with anything that we do. Volume is a fallacy, like volume profile and how many orders, like those volume bars and whatnot. There's no volume. This can happen, right? This coming from here all the way down to here can happen with a buyer and a seller. If they want price to move down there, they just need one transaction to make that happen. It's just kind of like the way it is. The dynamics of order pairing and how price delivers to specific levels. They're offering price. When price is going lower, they're offering price lower. And as buyers and sellers, right? They're fulfilling buys and sells at every single level as the algorithm is offering price to specific logical levels where other liquidity is at. Or algorithmic reference points like PD arrays, right? I believe the PD arrays in algorithmic terms are nodes, right? I've heard some computer coder people that I've talked to, right, that trade ICT's concepts and have a computer coder background, like their mindset. They see these nodes as reference points, right? Or they look at PD arrays and the references to them as like nodes, right? I'm not a computer coder, right? So I may butcher some of the stuff that they've tried to tell me. But that's the thing. It's offering price and it has reference points. And those reference points are also referred to at specific times, right? And algorithms run off time and specific references, right? Or if-then scenarios, right? And things that they systematically program for price to read or for the algorithm to catch on to and refer to, right? And of course, just obviously for those of you that are involved in coding are probably like, this guy, what the heck? I'm not a computer coder, but that's why the language ICT's created is amazing, because you don't have to be. And the language that we know in terms of ICT concepts is more than enough, right? But that was something interesting that I've discovered But yeah, there's no volume, like I said, ever. It's always going to be offering price to liquidity, right? Or to inefficiencies, right? Because price can only do one of three things, right? It's going to attack some form of a high or a low, create, rebalance, or retrade to an inefficiency, or some other PD array that's, in price that we could see, or it's going to be range bound consolidation, right? So right now, right, last week, price offered, price lower, took out the low, these equal lows. Those of you that have been with me for a while, the last couple of weeks, we've been talking about these equal lows getting purged. We talked about this fair value gap being used to send price lower. Go back and look at the recording on the 22nd of September or before that, like when price was in here, we were talking about it. Once these equal lows were created, I literally said we're going to go up here. I drew the little arrow, drew a yellow box, and said we're probably going to go down there. And what do you know? Price ended up down there beautifully, right? And we don't trade this, right? We could trade anything, honestly. And all the markets that we talk about, from bond yields, DXY, currencies, and the even commodities, right? Indices, everything has done pretty much all the stuff that we've outlined, right? If you go double check and remember the things that I talk about across all these different assets, you'll see that pretty much all of them have delivered to every target we've looked at. It's not just the indices, and we get, of course, when we focus on one asset, you want to do that, obviously. But if you want to see even more validity to what it is that we do here, I'm calling multiple markets every single week that are hitting multiple targets almost perfectly. Not every time perfect. Sometimes it takes a little longer. But at the end of the day, all of them have fulfilled the targets that I've outlined. I write them down and I do the recording, and I'm the one doing the analysis. So I've seen it, right? And if you go back and look, you'll see it too, So this stuff it's just amazing, right? But yeah, hopefully this is edifying, right? And you can kind of remember when we talked about the bond yields dropping, you can see the impact that this has while DXY was going higher. With this going lower, this predicted the future of what DXY was going to eventually do when it hit a PD array. As price was going higher, in the face of this going higher, the yields were dropping. Right? So what happened? The yields kept dropping. Right? And then DXY hit a logical PD array and then started a decline. Right? Getting back in line with what the yields were doing. Right? Now, is this going to continue to drop and be sustained to the downside? We'll see what happens with the yields here below these lows. Okay, but again, coming back to some of the liquidity ideas and some of the first things you want to identify. Hopefully some of that stuff I just talked about is pretty helpful to you guys. Maybe shifts in perspective, or just maybe adds to some of the stuff you guys already know, or maybe you learned something new. But hopefully it was of value. But yeah, in terms of where we're at now, right, price has basically swept the lows. Right, we're at an order block here, kind of a unorganized price, it seems like, or it looks like. There's a rhyme and reason why all this stuff does what it does, so it's never random. But we can see the order block here. We have the 50% of the order block. If we break down further and get down below that, we're definitely going to be watching what this reaction is going to be here. Right, we want to see, right, it did wick down below it and we quickly got back above it. So we definitely want to observe what price is going to do here. The only way that I will be looking for this to go higher and be bullish is if we break this high up here, okay? Because if we do that, we will then have this type of scenario. Because we're going to open, right? Maybe something like this can happen. Maybe it does it. Maybe it does it in a couple of other candles too. Maybe it does something like this. But if we can get something like this to happen, right, we would then see a overlap of the fair value gap. We would see disrespect of this wick 50% level, which should act as a premium array. So we should, in all in all honesty, if we're going to continue to drop, let me actually color code this properly so none of you guys get confused. Okay, if we do end up getting a drop, I would really prefer to see like a slight like wick maybe above this high to sweep the previous week's high, use it as counterparty liquidity to then tank and target some of this and invalidate this order block and so on and so forth. Or we may, you know, see something like this happen. It may cover it up with the whole body. You know, hit this. Preferably it stays below it, and then maybe start to decline. Or like I said, it could end up doing something like this. And what would turn my attention to bullishness for this asset would be us overtaking this fair value gap. Maybe it does something like this too, right? Maybe it sends a wick down, uses it as support, right? This would then be a BPR, right? If we can overtake that fair value gap, that's a type of BPR. Order blocks, when they are created and respected, they are performing as a balanced price range. Breakers are performing as balanced price ranges. That's why it shouldn't return to the midpoint. It should react quick from that last down candle if we're bearish, or that last up candle if we're bullish in a bullish breaker. Okay. There's types of balanced price ranges. You know what I mean? They behave as such. So if this was to overtake this, we'd be violating the fair value gap. We'd be invalidating the wick 50%. We also have an order block. So that's 3 PD arrays right there. Okay, we got the order block 50%. We have the wick midpoint and the fair value gap. And if we were to get up above this high, that fully confirms for me from this weekly chart that price may continue to try to, you know, dig a little bit deeper. And then of course we'd have to see what the reaction would be up in this. So yeah, we'd have some early signs that we may be changing the overall delivery from bearish to bullish. But this right here would be a scenario that would turn me to focus on potentially higher prices. That would then also interest me in seeing this going higher, or pique my interest to see DXY continue to go to the buy side. We do see that the monthly chart here on the DXY is kind of, you know, moving a little bit sideways, right? We've been consolidated for months, right? 1, 2, 3, 4, 5 months, pretty much. And now we're kind of just back in the middle of the range from this high to that low. So equilibrium from this high to that low. If we stay there, we'll probably stay stuck until some news event like CPI or NFP comes out and then really pushes us out of that range, either higher or lower, right? We've been working this quarterly fair value gap. I've been keeping on the chart purposefully for literally months since back here when we used it as a target in this market maker sell model, right? But yeah, it's clearly holding in there pretty aggressively. So maybe this leads to us turning. For us to trust buy side, like fully being engaged in the DXY, like more long term, again, I would like to see a healthy relationship between the yields and the DXY. I don't want to see a crack in correlation. You know, this may lead to price turning and doing something like this. We're not going to know, right? So going into this week, we'll keep this type of view in mind, right? These invalidation levels for this weekly chart, that's what we're going to keep in mind. But we're going to more or less try to go into this week favoring, you know, maybe something like this. See if we can get, you know, a run up. Maybe the whole week ends like this, or maybe, you know, it does like a big wick up to the previous week's high, and then maybe we get displacement like this, right? This may not need to get traded back into if this wick is going to be respected. When a wick overtakes imbalance, sorry, I just like almost blinked right there. When a wick overtakes an imbalance or a displacement like this, the whole entire wick area should be classified as a BPR. Why? What's the logic that puts you in position to think that way? Well, when a wick goes down and comes all the way back up, what's been offered? Can you guys tell me in the chat? When a wick goes down and it finishes up like that, or back up to the buy side, maybe even finishes in a bullish candle or a bearish candle, right? It could do the same thing with a bearish candle. But when a wick does this, and it's long wick, and then it's overtaken by a displacement. Fritz said both buy side and sell side's been offered. So the next time when price overtakes that whole range should be looked at as a potential balanced price range. And if it's violated, like I said, it's used as a premium array in this case. So if we're taking our 3 PDA rule and we're using that to verify specific things, whether it's going to continue or not continue in reverse, that becomes a PD array to watch, right? All the quadrants too, right? They're going to be significant. Maybe it can't even get to the 50% and it uses this and then continues to drop. That is a heavily bearish market. Okay, and then that would probably instigate the delivery down to this low, right? It's going to confirm it even stronger that we're probably going to get down below this low, maybe even target these equal lows here. It's a weekly chart, so this may take a couple weeks, maybe a month or so. Maybe it won't be able to get there by the end of the year. You know, it could take that long, right? But this is something that we want to watch, right? It's going to open up. We're thinking power 3, right? We may consolidate, right? It may look to reach up into this, right? We may have like a very small candle, right? Maybe it wicks a little bit down, uses the quadrants in here as a launching point to send us up into this, right? We may end the week with something like this, right? Right? It may overtake it, right? Or we may end up just, slowly trying to gravitate lower. Maybe the likelihood is also relevant to think about this right here. If I can highlight the damn thing. Or we could also see price do something like this, right? And kind of stay inside the range, right? It could also do that. I don't honestly think that it's going to be allowed to do that because of CPI. We may close like this, but CPI may come up and do something like this, right? It may be stuck for a couple days up to Thursday and Friday. And then once CPI comes out on Friday, we may send it up to a specific liquidity pool. Regardless of where it goes, the previous week's high and low, like I mentioned early on, that's going to be important for calibration of liquidity, right? Of where price needs to get to before it can get up into this fair value gap or before it can get down into a deeper discount here into this order block, right, towards this low. So those are some scenarios I'm thinking about, some different areas in price I want to watch. We do have this previous week's high. We don't really have any other lows of significance when we look at this weekly chart. But in terms of narrative and what we're trying to look for, this is kind of what my opinion is going to be for the coming week. We've already taken out some liquidity in here, these relative equal lows. We're now tapping inside of the order block here. So another thing you can have on your chart, take the whole body of the order block on this weekly candle. And you can kind of map out I'm debating on if I should keep the fib there, because then it'll have all the levels. Yeah, I guess I could leave it over there so it's kind of out of the way. I don't want to have it too crowded. But this essentially is all I'm going to be having on the chart for this. I want you to go into your chart and kind of paint this visual, all the different scenarios that I just created, or go back and screenshot some of the stuff that I just did and put it in your notes. Preferably you go in and do this on your own. But take a screenshot of some of those examples I just showed of what the weekly candle could look like in the coming week. And then maybe leave some of the notes that I just mentioned. And then let's see what happens, right? At the end of the week, look and see which one played out, right? And then I'd like for you guys to share that with me, those of you that do go ahead and do that. And then we can talk about it next week in terms of review, right? But yeah, so does everything make sense so far? As far as what the possibilities are, what I'm favoring versus what would happen, or what would change my opinion for this to stop going to the downside? I do want, yeah, let me know in the chat if all this stuff has made sense so far. Go to the monthly chart, we can kind of see we're blowing past the 50% of this order block. That makes me feel like we're even more likely to continue to try to dig. We've also had a change in the state of delivery, this up candle. Pretty rapid closure below that. So if we can create another order block and then violate it again on this monthly chart, we are long-term bearish, and we're probably going to target something like this. All right, and these relative equal lows down here have a fair value gap. This is very far away. I'm not saying that you need to pay attention to this. I'm a very long-term thinker, so I think way down the line. You know what I mean? And if something's down there, I'll keep my eyes on that for months. Just like the quarterly fair value gap that I just mentioned. I had my eyes on that literally when we were still in the market maker sell model up here. Like way up here. I had my eyes on that quarterly fair value gap because it had equal lows. It was pretty much the only gap aside from this one, right? I talked about that one too before that. But once it breached that, this low here, we had a breaker here on the monthly chart, and we used that to get us down into there. And then ever since, I've kept it on the chart. 3-month chart, right? It's a quarterly chart. Because all the same stuff happens on every time frame. And the larger time frame that you can have and master, right? If you can master a 3-month chart, if you can master a monthly chart, a 6-month chart, a 4-month chart, right? 8-month chart, you can have a higher time frame view for months, right? And when you're navigating those lower time frames, you'll keep that in your mind, like, oh well, overall we're in a pretty large long-term bullish or bearish idea. You know what I mean? It's not for everyone, right? Scalpers, a lot of times, they don't like that. They don't like to look at the quarterly chart or even the monthly chart at times. I have some students that only like to use the 4-hour chart as their daily. And there's nothing wrong with that, right? I'm not going to pull you away from that, those of you that have that type of view. But you definitely want to just consider, right? Maybe later on when you get more experience, more versatile in your understanding, you can try to add on these massively large time frames, and we can have conversations about it, and I can help keep you on the rails, because you can get lost if you're not understanding the time frame to time frame analysis too much, and you're just starting or just don't really have that much experience. It could be kind of overwhelming, and it takes so long for these time frames to play out. So a lot of times it would take years for you to trust your higher time frame analysis, because it won't get there right away, and there'll be other things that'll distract you with the lower time frames and day to day. But it is important, right? At least a monthly chart, right? ICT says this as well. Your bias or your overall narrative comes from the monthly and weekly, daily charts. If you're going to be a well-rounded, versatile trader. Obviously, again, it's not a be-all, end-all. There's many ways to skin this cat, right? You could do many, many things, but this is something that's a commonality. A lot of those people that I mentioned earlier that are really, really high-level traders, they're not ignoring the monthly chart, the quarterly chart, the daily, weekly chart. They're not ignoring those things. They have it there. They may not show it all the time, but it's always there, right? Like ICT has said, where do you spend the most time, ICT? Where do you spend the most time, right? What concept, what thing do you use the most? Where do you spend the most time to be able to be so accurate? And he clearly has said on numerous occasions, the higher time frame. And if you don't understand the higher time frame, if you can't navigate it, but you're trading on the lower time frame, you're gambling. Okay? Because you could be shorting on the 15-minute, on the 1 second, right? But the daily chart's bullish. So it's shorting for a couple minutes, maybe an hour or two, just to get into a bullish PD array on that daily chart to then go higher. And in that instance, you're probably taking the short on that lower time frame, and now you get completely blown out. And then you think concepts don't work, and you don't know what the hell's going on, and now you're confused, and you think it's impossible. When in reality, you're not paying attention to the full picture. And that's why what you get into is so short-lived, right? So this is an example of why the higher time frame is so important for those that may not know. A lot of you guys that are on here probably do know. I know a lot of you guys have been with me for a while. But, there's always going to be someone that may not. So it's very helpful to include that stuff. All right. So yeah, again, hopefully the bonds and yields make sense. We'll see if we can have something like this happen, right? Maybe the CPI delivery wicks up, breaks down. The only way that I'm overwhelmingly going to be bullish is, or at least start to consider being bullish from being bearish so far. We're going to require that price breaks 3 PD arrays to the buy side. Preferably breaks above this high or runs up, overtakes this, maybe leaves something like this. All right, maybe it does the down movement there, gives us one up movement that overlaps the fair value gap. Maybe it takes out the 50% of that, pushes into that. Maybe this order block, the open, leads to price creating something like this. That maybe pulls price back into this up candle, which if it overtakes this fair value gap, that's going to basically turn this into a change in the state once it gets above this order block. It just further reinforces that this order block is probably worthy of it being a change in the state of delivery, right? Of watching it potentially to reverse, right? It may do something like this. And if it was to do something like this, okay, that would be very impactful because we'd have one change in the state, another order block, and then a secondary change in the state of delivery. That would be beautiful for us to then target this up here. Okay, so that would be something that would lead me to further believe that we're going to target buy side, and sell side would probably be uninteresting. This would fully, before it gets up to this high, if this was to happen, that would confirm my belief that 3 PD arrays have now been violated, and then we've had 2 changes in the state of delivery off of a stop hunt at an order block, right, on this weekly chart. So that would change my overall narrative. And then the only way that would fail, or I would basically be able to get back in line with shorts if that was to take place, it would have to do something like this and really break through. Maybe not so dramatic, but we'd have to see something else like this. That would be the only way. If this happened, this would be the only way I would be able to get back in line with the short idea for this asset. If this scenario played out and we got up here, I'd be looking for buys, right? But if this was to decline like that again, I would say, okay, well, I guess we're not going to go higher. And then, we would then see this continue to drop. Now like this, right? It'd probably be something like this, maybe like this. Right? So hopefully that makes sense. Just kind of gave something pretty powerful. Secondary change in the state of delivery idea. But yeah, so hopefully this makes sense. Before we move on, does everything make sense with this asset? And if it does, we will be moving on. So this is all I'm going to keep tabs on here. Remember, these levels have to be taken first before I can even consider or worry about this high up here. Right, same thing with this over here. We have all these levels to be violated first before I start to worry or concern myself with this deeper level. First and foremost, this, and getting back into the order block, right? ICT Disciple, I appreciate your appreciation, brother. Fritz said, you having us ask ourselves if this was the 5-minute chart has helped so much. Fritz, I'm grateful. That's something that I had to, nobody ever told that to me, right? Nobody ever pointed it out in the context that I pointed out in. So I'm grateful that it has hit you in the same way that it hit me. Because the way that I've learned and been able to simplify and teach myself, I've tried to be able to project that onto you guys, and I've seen incredible results with it. I've seen you guys just start overflowing with clarity, and it just shows that somehow I was able to get myself to navigate this stuff when it felt impossible in certain moments. And I'm grateful that I have that wisdom to share with you guys. So I'm glad that it's helped. Where are you from? I am from the U.S., America, right? But yeah, where are you guys from? All of you guys, let me know in the chat where you guys are from. But yeah, we're gonna move on real quick. But yeah, throw that in the chat. Let me know where you guys are from. I know where some of you guys are from. But let's see. Let's see what parts of the world we're invading. But yeah, so this is what we're going to watch, okay? We'll see if it can come up and go down or overtake it and go higher. I prefer to see it go lower, right? We're not doing both sides nonsense. I want to see this hold up here. This wick, fair value gap, order block, and then, of course, the high is the last line of defense. Dave Fritz is from South Africa. 1800 Rodri. Oh, I remember you. What's up, Rodri? My boy in Texas. I'm about to be headed to Texas very soon. Trust me. Definitely got to get out of where I'm living at right now. Yeah, South Africa. That's wild. Okay, he said India. Nice. Nice. Dang. So yeah, I got now I got people. I got people from South Africa, India. I have a couple of students in UK and Greece. All throughout America too. I have a student in Colombia. I have a student in Spain. Right? The internet is amazing. It really is. You know, ICT's concepts are also amazing too because it's brought us together. It's just amazing. Yeah, yo, I'm definitely gonna let you know. Gotta show me where I gotta come to. Right, I gotta migrate over there. I gotta get out of this place. It's not where any entrepreneurs should live, especially traders. Is anyone successful? Unless you want to pay massive amount of taxes for the rest of your life. And yeah, it's insane. But yeah, I'm definitely gonna let you know. Appreciate that. But yeah, thank you guys for indulging me by letting me know where you guys are from. Amazing. Yeah, hopefully this makes sense. If you guys got questions about the yields, just have me come back to it, okay? But since that's what we're kind of looking for in the yields, what do you guys think we should be seeing take place in the bonds? I've been trading for a little bit over 6 years. Been profitable for 3.5, 4 years. Towards like the second year was when I started having some serious breakthroughs with ICT's concepts. That's also when I met a lot of really, really helpful, gracious people that kind of helped push me along too. I met my other two mentors outside of ICT, who are ICT traders. They've been trading for a long, long time. They were with ICT when he was back on baby pips. One of them was. And yeah, it's pretty amazing. Baltimore, Maryland. Wow, you're in Maryland, bro? That's where ICT lives. ICT lives. He literally lives, I think, in Baltimore, somewhere close to Baltimore. Dang, I didn't know that. That's dope, Tony. I gotta come out there. We gotta go find ICT, man. He'd be upset if we did that. But hey, hopefully God gives me the opportunity to shake that man's hand because oh man, I don't know where my life would be if I didn't discover this stuff, really, and discover him also. He deserves a lot of credit. Not all the credit, like he says. You know, he doesn't want his students giving all the credit to him because we took the risk. We put the long nights, early mornings, constantly facing failure and overcoming it, constantly needing to improve ourselves. He just kind of gave us the tools. You know, it's like someone that builds a house. You know, the person that taught you how to build the house, did they get the credit because they taught you the ins and outs of building the house? No, you get the credit for building that project. So it's the same with us, right? As we're trading, you know, when we learn something, ICT is giving us tools. but we got to go build our house, right? And once you build that house, you need to make sure that you're giving yourself the credit. We continue DXY highs, Ponzi is decline. Yeah. Yeah, he's in freaking Maryland. It's amazing. Amazing. Maybe continue DXY making bullish highs with bonds decline. Yeah, so if we got the yields going lower, if it is going to have lower prices here with the yields, that's going to put downward pressure, right? If you want to call it that, or down, a better term would be downside interest, right? Because they're offering sell side when they're dropping, they're offering buy side when it's going bullish. So if this is going to continue offering sell side delivery, and we're going to respect these PD arrays, and order flow is going to continue to respect up candles, down wicks as premium arrays, bearish fair value gaps as premium arrays. If this is what's going to continue, this is going to have downside interest in the DXY. And if that's going to happen, the bonds are reverse correlated to what the yields are going to do. So if the yields go lower, we would like to see if this can still continue trying to push to the buy side. And if you guys remember, we've had these buy side liquidity pools outlined for the last, I don't know, a couple months as possibilities, right? We got this monthly high up here. Where's my previous month high? Oh. Oh man, I don't know why it does this. I hate how it's lagging. I can't even click that. What a stupid thing. I have no idea why it does this. Yeah, and this one's real bad. I can't even do anything. I'm sorry about that, you guys. Just bear with me if you can. I appreciate it. Previous month high. In reality, since this is so big, like previous month high is right here. These are monthly candles. So I think it'd probably be more. Let me see. This is 2023 high. It's previous year high. Again, it may get up there, but I mean, it'll take a while to get up there. It's not necessarily something that I want to look at for tomorrow, right? What we do see, let me actually take this out too. It's just some like extremes that you can keep tabs on. Let me see what day. Yeah, 2023. We have 2024. I'll probably mark that buy side. First and foremost, though, we got to get up to this high, right? So we could look at this. We could go previous month high. And just for like references for the extremes, I'm gonna probably take this off because we don't need that. But yeah, so we have this wick in here, so you definitely want to map that out. We do have the fair value gap in here. We've watched that. If you go back and look at some of the other markups from the previous weeks, we've been trading inside this. We wanted to see how price was going to behave in this. If you guys remember, I mean, even last week, you can go look. I kind of deleted the markups today because I wanted to start fresh. I was getting a little too busy. Don't want things that are distracting. This is a monthly inversion fair value gap. And then of course inside of all this delivery in here, the wick, you're going to have dynamic levels, as we always talk about as well. Right, so yeah, we'll see how price wants to behave with that. Let me see what other things we can map. So in terms of this, we got this right here. And again, the yields indicate or positively impact the DXY. The bonds positively or should positively correlate and impact the foreign currencies like GBP and Euro and the indices, as well as commodities in some cases. You know, when things are symmetrical, right? If this is going higher, the commodities should be going higher because they do the opposite, like gold and silver. They do the opposite of what DXY does. It's reverse correlated. Not perfectly, right? But for the most part, you know, that's what you want to see if it's a healthy trending environment. All right, but yeah, we have this here. We have the order block in here. I mean, we could beautifully see order block here. All right, we got the order block here. Beautiful delivery. So what is being supported here? Up candles or down candles? Right? What candles are supporting price? Up or down candles right now? Can you guys tell me in the chat? So, Tony, up candles are supporting price. Down candles, exactly. The down candles are supporting price. The up candles are, of course, they're pushing up. We're pushing through up candles like this, right? We're kind of pushing through it. So when down candles are supporting price or bullish order blocks are starting to continuously be formed and act as support like this, okay? What is the order flow, at least for right now? What is the order flow showing you? We also see the fair value gap that should act as a bearish fair value gap. It's being traded through. So what order flow would you say, given those two elements that I just mentioned? Down candle supporting price and bearish fair value gaps being traded through, essentially turning to inversions. What order flow is taking place? Just with that information. Bullish or bearish? Bullish, exactly. Okay, you can kind of look at this one too, right? The monthly chart on this this view. We now changed the state of delivery. Okay, on the monthly chart, right? So we're going to continue to see, is this going to continue to be respected? If we keep pushing up like this, supporting down candles, violating up candle ranges, and overtaking bearish fair value gaps, right? You see an inverted one here. We do have a little bit of a fair value gap up here that may get reached into eventually. Maybe not anytime soon. It may take all year, the rest of the couple, next months to deliver us up to there. But yeah, we'll see if the overall undertone of the market will continue to be bullish. Those of you that have been with me for at least 6 months, you saw the fact that we called this potentially to go higher, and it's unfolded off the SMT that we identified as well. That we've been talking about that SMT for a long time at this point. The SMT being right here. Okay. See to the right, on those candles to the right, or the charts. My bad. You could see the lower low here, the higher low. Right. That's followed up with a change in the state above this high, above this candle. Okay. You can also see kind of where we've come from over here, right? Price has a high, a low, a high, then a failure swing that then takes this high out. Generally, when this type of phenomenon takes place, this high will get under attack. So all throughout here, we have seen that overall principle has held up. It has taken forever because of the interest rate conversations. I think we have an interest rate conversation coming on the 29th of this month. So yeah. Let me see. He said, called it out before it happened. Yeah, absolutely. It's like we got like a crystal ball over here for those that stick around and don't mind sitting and getting full details and don't have TikTok brain. You end up quickly seeing that what we do here is absolutely ridiculous on numerous markets, precise, like across the board. And Chowezi, you're one of them that has seen that for months at this point. I'm grateful you stuck around. Fritz, to all of you guys. Because this is a guarantee that I give here. Okay, the guarantee, I can't guarantee you profitability because I can't take the trades. I can't manage your trades for you. I can't make you not overtrade and over leverage. I can't make you follow the rules. But what I can help you with, and almost guarantee, is you'll gain a lot more clarity, if not full clarity, as far as what you believe price is going to do on a regular basis. You know, I can give you clarity of process. Like, that's something I can guarantee. Everybody that spends time with me, you know, whether it's for a couple months or, you know, they want to be part of the family for a lifetime, that's almost always taken, right? Or almost achieved. Almost always achieved, I should say, in terms of clarity, right? That's why I say confusion to clarity, right? Instead of guaranteed profitability. I can't say that one, but yeah, you know, clarity is good enough, because once you get clarity, you can walk the rest of the way. You're gonna have to, you know. It's just like when people graduate college. What is their professor gonna come and work your job for you? They're helping you. They gave you all the tools. At some point, you got to walk, you know, the rest of the way, you know, and you know, they could be there to support you, to help you, and continuously, you know, be part of your network. But at the end of the day, you know, we all have to walk the rest of the way when it comes to profitability, because no one's going to take the trades for you. Even people that give you signals aren't taking the trade for you, because they may tell you a signal and you may not be able to hold the trade long enough, right? They may be in and out, getting whatever their target was, and you may be turning their day trade that they gave you into a swing trade because you just think that it's going to go farther, or you're not satisfied, you know, things like that. Like, those types of perspectives are why signals don't work, you know. But, you know, again, clarity is definitely something I can guarantee. For those that do stick around and give it a serious effort and take the advice and look at the things that I tell you to look at and study, ask questions, show up regularly, it's undeniable. And I could say that because the last 3.5 years has proven it, you know, and I personally prove it too, you know. And then a lot of my students have now been proving it as well, continuously, both here on YouTube and in my private group, especially my private group. I mean, man, it's wild what some of those students are doing. But please use that demonstration pointer in trading. What? I'm not too sure. What are you talking about? You talking about this thing right here? Path pointer. Is it hard to see my mouse cursor? I think I can make it bigger. I think I can make it. It's probably because of this little line looking thing, huh? Yeah. All right. Well, I'll make sure that I make it more clear. I didn't realize that it was so. Mouse cursor. Oh, okay. All right, Fritz, for sure. But yeah, so these are some of the levels from this perspective we're looking at. Again, we've called this, like Chowezi said, we called this well ahead, well in advance. We were here looking at things doing this exact thing before it even manifested, assuming that this was what was going to happen, which is why we continue to see price move higher in the indices up until recently, obviously, with the tariff conversation that they used as manipulation to liquidate all these, all the sell side down here. Don't worry, I'll clean all this up when we get to that. But yeah, this going higher. Interest rate announcements or cuts of interest rates while the stock market's at all-time highs. That has continued to lead to bullishness like we assumed it would. So for months, at this point, it's been almost 11 straight months we've been able to know where price is going to go. Maybe some of you guys didn't really fully recognize that because, there's so much stuff to do and our lives are busy. We have been literally almost 11 straight months calling the market perfectly. Well, damn near perfect, right? We can't say perfect, but damn near perfect, right? High 90% accuracy with where price is headed. And it's because of these higher time frames. He said, no, the cursor, there are options to select demonstration cursor. Is there? I don't even know. You can change the cursor? I see this stupid thing. I keep clicking on stuff. It still doesn't want to do it. All right, I'll look into that. I'll look into that and see. I didn't even know that. I didn't even know there was an option to do that. I don't know why it's not letting me do anything with the settings. Every time I click settings, it closes. Oh, there we go. Where? Tool panel at the left. Click on it. Oh, right there. I've never even clicked on that. Oh, wow. Yeah, I never even knew that. Can I change the color? Can I change the color? I don't know. All right, we'll see see what I could do later with it. But yeah, so hopefully it made sense on the weekly, monthly chart. Now we're on the weekly. So if we look at this, if we move to the 2-week chart, we saw those consecutive down candles there. We do have this as a bullish order block. So I'm gonna yes, it's the 2-week, but I'm gonna I'm gonna label it as a weekly bullish order block, okay? Just so you guys are aware, okay? It has taken that liquidity. So if it retraces into it, we do not. If it's going to be bullish, we do not want to see the 50% of this taken out. Okay, and we will use it as a dash line. Okay. So yeah, right here we see that let's stop hunt. We got above this order block. That's one change in the state. And we had a secondary change here. And then a third one here. Right, so continuously changing the state back to bullishness. And now we got this most recent one. And we're pushing inside this opposing PD array, right? All these quadrants within that higher time frame monthly wick. Right, so now we can see that, it's pushing into that level, and now it's triggering in a response back to the downside, or, just like a reversal real quick. So again, this high to that low, if this is an order block, that should be a BPR. So again, we do not want to see this high to that low get violated. Specifically, the weekly order block body on that 2-week chart, or we could just simply say a weekly chart to make it not complicated. Right, I wouldn't be surprised if we open up and try to do something like this. Basically reverse to what we were talking about in the yields, okay? Just paint out a couple of scenarios that we may be able to see. So I wouldn't be surprised if, honestly, this can't really do too much of an aggressive run. We do have the wick in here to watch, the 2-week area, right? With the wick, you can map that out. Preferably, we're going to stay above the 50%. So I would not necessarily, ideally, want to see this break too deep. I would love to see this wick here get respected. If you notice, we have buy side, sell side, we have buy side. We have a lot of overlap in here, so there's no inefficiency in this area. So this high to that low, also given the fact that it's an order block, I definitely would like to anticipate us continuing to go higher. If we move up to the daily chart, I think we can also see something significant. Right, price is going lower to go higher. Okay, if we're going to target this high up here, if it is going to continue and break through all that, this could end up turning into a market maker buy model. So far, it has behaved like a somewhat sloppy, but still present market maker buy model. Consolidation, accumulation, reaccumulation, smart money reversal. Right, first stage distribution, second stage distributions up here. It's highly extended up there because it was so manipulated with the wick on that monthly chart. So it may take some time to get up there. If it does choose to get up there, we don't aim for price to get up here any deeper if this results in price breaking through some of these lower levels like I mentioned. If we target, or if we break down and we get below the 50% from this high to that low, or especially if we break down through the 2-week order block 50% level, which is down here. Actually go get a exact measurement. Yeah. Well, that's a pretty good eyeball. Freaking eyeballed the perfect middle part. Yeah, we'll keep our eyes on that and then just remind ourselves. You see that this wick here, the monthly wick, right, the low of that monthly wick that we identified, you notice how when we go to the weekly chart, how it's right in the middle, right? It's damn near right smack in the center almost with where the 50% of this order block's wick is located. Those are nice overlapping indications that that level is pretty significant. But again, we have lots of buy side and sell side offered in here, no inefficiency. So I wouldn't be surprised if we do not try to attempt to aggressively get down into this, and we maybe open up like this, maybe attempts to break down but fails, maybe uses the middle portion of this wick, also this these wick levels, and maybe even the low here of that monthly wick body, right up in here as a potential support. Maybe we get something like this that takes place, right? Like a kind of stretch this out a little bit. Maybe we get something like this taking place. Or maybe it creates another down candle just to try to wick lower. Maybe it digs down here to the body of that weekly, that 2-week bullish order block. What would that do? That would sweep out. What is this low? Let me know in the chat. What's that low? I know there's a lag, so I'll just give it a minute. Previous week's low, exactly, Fritz. So in this case, if the previous week's low does get targeted, what is that previous week's low liquidity being targeted as? Like, what is the purpose the price would go down there? If we're still bullish, what is the purpose, right? Why would it target that low if it's going to go higher? What is it doing, right? If that is what we see take place, why would it do that? Why would that make sense? That's a good answer. Internal range to external range. What else? What is resting below there? Engineering sell side to grab liquidity. Exactly. It wants to grab liquidity because if you think of a weekly power 3, right? If we're going to be, bullish, right? Maybe it doesn't fully close as a bearish candle. Maybe it just, wicks down there like that and then just, does something like this. Just a simple wick to sweep the low out. This right here, the wick, the candle blowing through, and then another wick that goes down, overlapping. So these two wicks are somewhat overlapping in there. This right here is called an implied fair value gap. It's where a wick is overlapping, like a wick. There's a decent sized wick with a body that overlaps or displaces away, but then another wick comes down consecutively within these 3 candles, and the 2 wicks somewhat overlap each other. If you take the 50% of that, of the upper wick and the lower wick, and you get the range in between that, that is a PD array ICT's mentioned before. It was the implied fair value gap. So we also have an implied fair value gap here to watch. Whoops. Okay, so I'll actually turn that yellow. And hopefully you guys recognize this, right? That's a previous week's low. So this previous week's low may get targeted for counterparty liquidity or internal range liquidity. It's also coupled with the weekly bullish order block, right? Mind you, when we open up, these are things that we're thinking about, right? If it's going to continue to go higher and we're going to keep going from internal range to external, internal range to external, maybe internal range once more, right? Give a wick, and we're going to continue to be bullish. This could be what it does. Where's the liquidity? Below the previous week's low if we're looking at this weekly chart, right? So it's reasonable to anticipate this next weekly candle may look like this. CPI's come in next week. I wouldn't be surprised if all of this happens going into CPI, and then CPI comes out, and instead of being like a down candle, it quickly starts to rapidly go from previous week's low to previous week's high. Because now we've wiped out both liquidity. CPI generally can bring that. NFP, FOMC, that type of delivery can be seen in those scenarios. But you got to be patient to watch it. So some of these scenarios that I've talked about, just like on the other asset, I want you guys to think about. Take a screenshot of them, save them for next week. You always want to take screenshots of some of your opinion from the start of the week to the next week. You want to carry it over to the next week and see how correct you were. What did you miss? What did you think? And then what transpired? What did you get right? What did you get wrong? And then try to figure out why, right? I mean, that's like some of the best drills to do, especially like taking screenshots, like I just said, week to week, and then comparing. Make sure you do a very detailed job of describing your thoughts, or you can do what I do and just record, right? You could record your Sunday analysis, right? Just vocally or visually and vocally. You can use Zoom for free, right? And just have that as your recording software. And whatever you use for a mic, it could be your headphone, right? It doesn't have to be complicated. But that can be a great way to archive things and just get a hard drive with 5-10 terabytes, preferably 10 terabytes because it takes a while. And you won't have to buy memory for a long time, and you'll have a beautiful journal digitally that's saved so that you can always go back and relive some of your experiences. That's what I do, right? I've been doing that for a little over 3.5 years. Let me see. Fritz said that possible interrange liquidity is well within the range the last 3 candles has printed. Yeah, absolutely. And of course, it may not get down there, right? If we go down to the daily chart, Friday's low is right here. It may only need to target Friday's low, or it may just need to come and target some of, Thursday or Wednesday or last Tuesday's low, right? It may just do a shallow one. Because remember, this is an implied fair value gap in here. The down wick here, the up wick, these are the 50% levels within that, right? So it may not have to come as deep as I just portrayed and target the weekly low here. I do see if there's an order block there. We do got to consider that the weekly order block that we outlined, it's got the wicks, right? It's got a large wick there, okay? So it could use one of these quadrants in here instead, right? We probably should map this out, the 50% of that wick. I think that would be eventful to keep tabs on it just in case it does open up and, doesn't really want to. Oh, wait, what? The opens up there. So yeah, it would potentially open up and, either go lower to target that or the 50% of this wick here. Weekly wick, consequent encroachment. I can say that if we can't even get down to that 50% of that wick, we are exceedingly bullish. If we can't dig into some of this wick that's also part of the order block, because we pretty much got above it, right? It triggered in the 2-week order block. This whole high to low should act as a BPR. So if it spends time in here, it needs to stay above the 50% of the range, preferably above the 50% of this. It can be very forgiving if it does reach down into that because it is an order block, because we did take out the high here and trigger in a change in the state here, right? Even more so here. But we can give an allowance for price to want to dig a little deeper into it till the open. But if we're going to be bullish, we want to see fast movement. Like this, right? We don't want to see too lethargic delivery from these levels. These PD arrays that we look at, they need to be instant response. That tells you that you're in a barn burner of a move. And that's the type of stuff that we want to be involved in. That's why we wait for macros, because those time windows, that's when things really aggressively start to race, because it's time delivery. It's time to do these things when time and price align. Right, so if you have a fair value gap over here, for example, and you want to see that act as, something useful, you may be able to take a trade once it hits it, right? If it starts a little bit early, but you're breaking the rules. 5 minutes before, 5 minutes after, I kind of give leeway because, generally it works out still, and it gets you in the move a little bit sooner. You may have to sit through a little bit of drawdown, but most of the time, once it hits it within 5 minutes before, 5 minutes after the last 10 minutes, the first 10 minutes of every hour, 6:45. That's 5 minutes before the 6:50 macro, AM Pacific Standard Time, and then of course 7:10. The 7:10 portion of that same macro, you can push it to 7:15. Right, it's still reasonable from what I've studied. But if you see a fair value gap over here that it's 6:40, right, and say this is the 1 minute chart, you may want to wait till price does something like this real quick, right, or maybe get sorry, this is a blue candle. Just imagine it's a black candle. Okay, all right, actually let me change this so I don't confuse you guys. You may have to wait, right? And this right here may be the 650 macro or whatever macro you're trying to use. You may see the fair value gap in here, but if you drag it over, it may be used later on in the macro. right? So you may see a fair value gap or something that's forming prior, or like an order block or whatever you're trying to use, form before the macro, but you should consider waiting to see how the macro and price, time and price, how that can align, or if it will align. And when it does align, generally it's absolutely amazing, especially if you're knowing what the direction is. In this case, if you're bullish, and that would potentially result in right, that's what we want to see, God candles on every move, right? But even if it's like that, that's still good, right? But yeah, that's kind of just like a clear way of understanding time and price with the macros. You may need to wait, and the macro may deliver into a PD array that you spotted earlier, but it's not inside your macro window. Right? You may have to wait for it to dig into it when it's inside the time element that's programmed to allow price to move. That's why these macros are so important. Okay, and it's a way that you can view the macros. Okay, because I get a lot of questions. How do you use the macros? What if it doesn't show my model in the macro? Or what if there's a PD array that happens before? How do I just miss the move because it didn't happen in the macro? The PD array doesn't have to form in the macro. It could be a PD array that formed 10 minutes before, 20 minutes before, right? Hypothetically. But then in the macro, when it digs into that, time and price have now aligned, and you generally see price run when you're correct in terms of narrative and where it's going. Right? 1 5 minute for very good. Yeah, I think ICT's talked about this before. I think he's mentioned it before. I still get questions on a daily basis about these things. But some just kind of want to hear my description of it. Sometimes the same idea is communicated in a little bit more simplistic terms here and there. ICT is a great teacher, right? He's just not everyone's cup of tea, unfortunately, and that's where some of his students that are out here willing to give you guys their time, they're always going to have a place in this army, right? ICT generals, right? The ones that have already arrived, that are also willing to carry the torch that he's graciously handed off to everybody. Not yet, right? He's still out there teaching a bunch of stuff. I'm chiming in here and there, but there's not any more things that are really needed. I do get students that watch his recent stuff and they still ask me questions, so I do kind of feel like I have to look at it just to see what's being taught, just in case, so I can clarify if needed. But I'll be just flat out. If I'm not going to use something he's teaching, I don't care what he's teaching. If I'm not going to use it and it doesn't align with me, I'll be honest and I'll not have the answers to it. I'll say it's not necessary. It may be necessary for you, though. I don't want to pull you away from that type of stuff. Because if you guys are just learning, just trying to get your footing, you're not profitable yet, and you want to apply some of the stuff that you hear, because maybe it makes sense. I do not want to take you away from something that may make sense. I'm giving you my advice, the things that I do, things that I use, and the stuff that I've discovered that overlap. But again, you have to be able to decipher your own model. He did an insane teaching yesterday. Yeah, I listened to some of the stuff he was mentioning yesterday. I probably should go listen to the rest of it, because he was mentioning a lot of things that align perfectly with pretty much everything that we do. He didn't really teach anything new per se. He kind of just amplified certain things from what I was able to gather. So yeah, definitely useful. Like, he's been talking about Wix, right? I've watched like 2 or 3 of the videos that he's posted recently. He's been talking about the Wix a lot. I mean, how long have we been using the Wix, right? He's introduced the Wix 4 years ago, but he's now really amplifying like some of the stuff that he wasn't really giving as much detail on, which is, it's nice. right? Like the wicks on the daily time frames. Like I heard he was talking about how large moves almost all the time come from or are originated inside of a higher time frame wick quadrant. Another thing that stood out that most people probably didn't catch is the second stage distribution, which is something I talk about repeatedly because it's one of my favorite pieces to the models I use, and just like the framework, because I am heavily involved in using market maker models. That's like the underpinning of everything that I do, aside from Power 3 and that type of thing. But when it comes to the second stage distribution, ICT was talking about how when you look at the quadrant levels in a higher time frame wick, that say, it's a good example. So let's just pull this down just for completeness sake. So if you see that, there's like a quadrant in here, right? Like a quadrant level, and you're seeing price, do something like this, and it's declining to go higher. Down candles that go higher, you're thinking market maker buy model anyway. Okay? Up candles that go lower, that's a market maker sell model. At all times. This is happening constantly. Every bullish, bearish candle, it's creating a market maker buy or sell model. But when there's a quadrant on the daily chart, and you're seeing that a market maker buy model is forming within that, when price comes down like this, right? Say it goes like this, and then it's going to go higher to complete the market maker buy model that may be forming off of the down candle that leads to the run higher. The second stage distribution or later stages of that market maker buy model, the speed in which it uses to get above that high, if it's overtaken or overlapped in the same area as one of the quadrants, that's a crazy study you guys should go do. Because the amount of times that this idea correlates, it just adds on an amplification to why the second stage distribution in a market maker buy model is so absolutely phenomenal and delivers almost every time. When you're correct about the market maker buy or sell model and you identify the phases and you're identifying the second stage distribution, and it's overlapped with some confluence like this, I mean, it explains even further why this stuff is so aggressive, why it aggressively reprices to that level. It's because of things like this. These different elements are just overlapping one another. And it's absolutely incredible. It really is. So that's something that I caught yesterday that really stuck with me. I never noticed that, me personally. And then I went and spent like 20 minutes looking at things, and I found like 15 to 20 examples already. I'm like, holy crap, it happens every time. And if you're looking at like a 15-minute market maker buy model and you're on like the 1 hour or the 4 hour and you see a wick, the same thing happens, right? If you're on like a 15-minute framework, right? It's a 15-minute decline that's going to go higher. Maybe it's in a bullish higher time frame. And the 15-minute structure is a retracement, and you drop down to the 1 minute. And on that 15-minute retracement, there's a wick that the 5 minute or 1 minute is going to trade into for a 5-minute market maker buy model. That 15-minute wick quadrant's going to align with that second stage distribution on the market maker model on the 5 minute. That's going to blast through the 15-minute high. I hope that made sense. But it's fractal. This is fractal. On the daily chart, if it's on the weekly chart, we see a weekly wick, and we drop down to like a 4 hour and we see a market maker buy model. Like look at right here, right? Let me see, what is this? Okay, so this is a weekly wick, 50% level, right? If that's a weekly wick 50% level, this here lower to go higher, it's a market maker buy model, right? Consolidation, accumulation, reaccumulation, smart money reversal. First stage distribution, second stage distribution, overlapping the weekly wick 50% level, right? Like you just saw, right? Weekly wick. So on that weekly time frame that has a has the quadrants, the second stage distribution, if you can map it out relative to the time frame you're looking at, and it overlaps with a time frame that's above you, right? With the wick quadrant, that's just another reason that this is high probability, highly likely to blast through and finish off the market maker buy model relative to the time frame you're framing it on with speed, especially if the weekly, daily, and monthly chart is bullish. Yeah, Tony, you're absolutely right. Get the entry to take the time frame. Yeah, Tony, you're one of the probably like the one student that's literally been here from the moment, or maybe like a week or two later, but from like the moment that I started just deciding, all right, I'm going live every single week on YouTube. And I mean, it's just been insane, right? I've just been dumping so much incredible stuff from my mind onto this, right? Onto the channel. And from what I've been able to gather, I mean, I've been able to communicate this stuff pretty effectively. So I'm pretty grateful that you've been able to pick up on stuff like all the stuff that I've been talking about. But yeah, so hopefully, if you guys didn't watch his video yesterday or the other day, was it yesterday? I think it was yesterday. I do encourage you to go listen to it. There's a lot of different things. If you're brand new, you may be kind of lost on a lot of the stuff, but if you look at ICT stuff, right, and indulge yourself continuously still with his stuff, and then you come to a community like this that literally puts it into practice every single day, pretty much, most of his ideas, you can see it being explained from a different perspective that's not complicated. I'm not a computer coder. Okay, I didn't go to college. I'm just a normal person like you, like all you guys, and I had to simplify the explanations to myself so I could get it, because I'm not a complex individual. And I feel like that's been able to give me the ability to communicate some of these more complex ideas in simpler terms while keeping the main points that he's teaching intact, and not renaming things, not recreating this or that, trying to sound smart. I think it's been pretty effective too. So yeah, the bonds and yields, like I said, just so we can get back to this. Hopefully you guys got value from some of the stuff we were just going over. But yeah, if the yields are going to go lower, right, we got to watch this, see if it can respect that. That'll continue to push us lower. The bonds, right, we're going to look to see if we can go higher. Hopefully you guys picked up on that as we were talking about this. The implied fair value gap, we want to see if that can hold. Right, and then we'll see how this opening is going to happen. Is it going to wick lower, sweep out the previous day's low, Friday's low, maybe some of the previous days from Thursday, Wednesday, Tuesday of last week? The low is fully down there. Okay, we do got the weekly bullish order block like I talked about as well. But inside this is the implied. Right, so this is the weekly implied fair value gap. Okay, let's see the wick, body candle overtaking it. So this is important here, okay? So if it opens up here, wick's lower, we still have this weekly wick too. Okay, like I said, inside this, that then led to the market maker buy model rallying. Okay, and a beautiful example here of what I was just talking about. Oh. And so again, the same stuff is going to happen at each of these quadrants. Okay, so if we open up here, drop down, and it's going to end up going higher again, and we get a second stage distribution that forms again, crossing over this part of the wick on that weekly chart. Or this is a monthly wick. Okay, but if it gets the same phenomenon, like goes down like this and then goes up, similar to this, but happens over here, same thing will happen. If this is where the second stage distribution forms, bang, it's going to quickly go. And then the same thing will happen here potentially. And then the same thing, over here, all the way up to the high. If it is going to, in fact, continue to go higher. Which I think it's going to continue to go higher unless some of these lower levels are violated. Similar to this, if it breaks above, right, we have our view, right, and ability to be flexible. Same thing here. but this one's to the downside potentially, right? Preferably, we're going to stick to this going higher, stick to this going lower until these levels we have highlighted are violated. Let me just put an easy to see indication as far as what we're trying to see. All right, so yeah, hopefully that's clear. Hopefully that's clear enough, right? And of course, if you guys got extra questions, just let me know and I could slow down. I appreciate you guys sticking with me and being patient. And I know these calls can be kind of long at times, but I mean, there's just so much stuff that I have to talk about. You know, if you ask a question, I could sit here for, you know, a whole entire call talking about every topic. You know, and I try to make sure, or do the best I can to make sure that any question you guys give me gets a full, thorough, precise, detailed answer. So you have no more questions about that topic, at least for a good amount of time, until you hit like another level or something like that, or a new concept, right? Fritz said, you help amplify and package so much of the language. Yeah, I definitely try to give my view on things and how I learned and how because I had to watch videos, like all his videos, listen to his commentaries, listen to all the stuff that he's presented, be confused, and then take it back and watch it again and again, and then try to simplify it. What are the key elements, right? Like what doesn't necessarily matter right now? What are the key elements? How do I apply this stuff? How can I explain it easily to myself? And I had to sit for so long and figure that out. And it took forever. And I was spending hours and hours and hours trying to do this process. And I feel like it's benefited me. And now, thankfully, I'm able to allow it to benefit you guys too, by having that perspective and the fact that I did that. I think it's made me more effective in terms of portraying the messages, right, and teachings. I think also something that that can't be understated is you guys allowing me to help you and coming and asking questions and constantly being vocal about your struggles and things you're having a hard time with. It's helped me as a mentor as well over the last 3.5 years I've been doing this publicly, right, and privately, right? Because if you can teach somebody how to do something properly, that proves that you know that concept. So if you're learning something and you have someone you can go teach it to, like a family member, a friend online, anyone that you can spill it out to and try to get them to understand it, if you can accomplish that and then do it over and over and over and over to multiple sources, I mean, you're proving to yourself every time you explain something to someone and they get an aha moment that you know what you're talking about. And if they can go and apply it, even better. You know, that's obviously the goal, right? You don't want to teach it incorrectly. So, you know, if you can teach it to somebody or simplify a concept so an everyday person can understand it, or even explain it simply to yourself, that's how you know that you understand a concept. And I think that process, along with my own efforts, obviously, and me helping myself, has really turned me into the mentor that I am today. And I think it's why a lot of the things that I teach are, at least, you know, from what I've been hearing, pretty effective. You know, and you guys on the call, you know, you guys are part of that group, you know, and so I appreciate you guys giving me the opportunity to share my wisdom with you, my experiences, because you guys make me better just as much as you believe I make you better or have been helping you get better. Right? So, you know, I appreciate you guys as much as you appreciate me. Every week, some of you in the private group every day, you know, so it's a two-way street here. You know, I may just be a little further along, but everybody has value, you know, whether you're first starting out, maybe you're facing a struggle that I never had to overcome. You know, me helping you get through that issue or you helping others get through that issue, it's making the whole situation better. It's making all of us better. You know, we're all in this together. You know what I mean? So yeah, I appreciate you guys for giving me that opportunity. And I'm grateful that I've been able to communicate this stuff in a way that you guys can understand. It's making it hopefully a little bit easier to like latch on to a lot of the concepts, you know, because of course that's kind of like a main objective, you know, so try to get it to be less confusing and to put clarity in an attainable position for you, you know, and then you got to, again, walk the rest of the way. But yeah, so that's the bonds and yields, right? So if we think that the yields are going to go lower and the bonds are going to go higher, just so we can get back to the analysis, I do believe that we will have to verify that, or use that to verify whether this is going to be just a simple rally to try to decline. If it is going to be a rally to decline, we did have a shift, change in the state here. And so this low here, we got a high, low, failure swing, shift below this low. So we got a C, plus we do got this suspension block, right? That's one of the things ICT's mentioned. I mean, if you don't want to call it a suspension block, you could just put it in the realm of fair value gap. It's pretty much just a variation of the fair value gap, right? ICT always said when there's a gap, you have to include the volume imbalances anyway. So whether he mentioned this as a suspension block or not, or any other name, it's still part of the family of fair value gap, right? So it doesn't really matter. There's no difference. When it hits it, it should respect it and bounce. If it breaks through it, it should invert and resist price and go the other way, right? So we're going to see this low here, creating a high. If this inverts and then we break through this again, there's one change in the state here. What happens if this low is left and then that gets violated? What does that become? Can you guys tell me in the chat? Just throw it in the chat if you know. If you don't know, you could just say, I don't know. Sell model. That's true. Fritz, that's the answer I was looking for. Second change in the state. All right. So we'll have that secondary change in the state. This may be a little bit risky to try to anticipate that this is going to continue to drop. If you want to be very conservative, right, you can sit there and think, okay, well, I need to see this secondary change in the state happen. And that would take place if we get an order block that forms and the price violates that low. So that'd be a secondary change in the state. And then we'd have other things behind us supporting the fact that we are in fact going to continue to drop. If we do break above the high here, right, this is Thursday's high, Friday's high. We got previous week's high, previous week's low. Okay, so those are important. Let me figure out a way to clean up some of this. And this right here is a mitigation block, okay? So yeah, we're gonna continue to monitor what this behavior is gonna be here inside this. Is it gonna invert and then break this low? That sets the stage for us to target the low down here. If it breaks through it and then reclaims that, uses it as support and then starts to push through this order block, then that puts us in position to target the buy side up here. So honestly, we're kind of in a position to have to wait. Right, it looks like a mess also on DXY. If we're going to trust the bonds and yields are going to have an impact, specifically the yields in this instance, if the DXY is going to continue and follow suit with that, and we are going to see the yields aggressively push lower, that's going to increase the likelihood that this is going to respect this level and probably target the sell side over continuing to try to run to the buy side. If we take the US dollar, we take it to the monthly chart. Right, we make this full. Unless price was to break above this, we're not necessarily highly bullish, right? If this was the 5-minute chart, I mean, it would make sense for us to try to run this out. But then again, we're having a response off of a bearish breaker on the monthly chart, right? We just came right back into it one more time, and look at the response away from it. Is that encouraging that that's not going to hold? Not necessarily. Now, if we were to break above this high, that'd be a different story, right? Because then we'd have one change in the state of delivery, right? The wick did take out the low, but at the same time, it closed above it. The wicks do the damage, bodies tell the real story, right? So that there would be one, and then if we were to break above this again, right, that'd be a lot more significant. And then we would be more confident that price is, in fact, long-term going to continue to run to the buy side and dig a little bit further into this. This wick too, right? You could see we couldn't even get to the 50%. That's not overwhelmingly bullish, even though we are kind of stuck in here. We're kind of stuck in between this wick and the breaker above us. You can see the response, and this quarterly fair value gap, right? And it's kind of just in a range, right? So in terms of DXY, we're not in the greatest of conditions. You know, so we got to make sure we're looking at near-term liquidity, previous week's high and low. You know, previous ranges, right? The previous week's range, right? The open, the close, right? The high and the low. The wicks that are in close proximity, right? I would suggest that you get the larger, right? The larger wicks. Try to outline those, just so you don't have a bunch of them. You don't have to have all the wicks. I mean, you could, for study purposes, look at all of them because they're all showing a story. But the larger wicks that are close to price, you know, you could focus on those to narrow your attention because there is a lot of wicks, and you don't want to have so many because it's already with this, it's already busy. I already feel like this is overwhelmingly busy. You know, it's too much. You know, I don't like it. And if you have one time frame that you're outlining the wicks on, the next time frame that you're gonna observe the wicks on, make it a different color. Okay, make it a different color, because you'll get lost, right? Make them, some of them dashed for like the daily chart, lower time frame, make them solid, or however you want to do it. But I encourage you to do something like that to differentiate, so it's not so busy. Especially with what ICT has been teaching recently, you know, it could be overwhelming. And the concept's fairly simple. But if you place a lot of them on the chart, you kind of distract yourself from the point. Because then it becomes too much. And you're like, okay, well, now new questions pop up. Which ones are more important? You know, what levels are more important? How do I use, you know, this time frame with this concept? And it becomes a chaotic mess. So pick the biggest ones, the ones that are in close proximity to where price is currently at, or, you know, if you could line up things with a reaction like this one, you know, keep them in mind, you know. And remember, every time price gets close to them and overtakes them, you want to remember that those, if we're bullish and there's a quadrant that we're overlapping, if there's a PD array that overlaps it, or if you're looking at the market maker model and it hits the second stage distribution phase and there's a quadrant you're overlapping, it's going to be very, very reactive. You know, so PD arrays coupled with the wicks, it's going to be a very reactive level, especially if you're on the higher time frame and you understand where price is going. It's just further contextualizes a lot of the information that we have available. Right? It doesn't change your model. It doesn't change anything you're looking at. It doesn't, you know, it's not a be all end all. You don't just throw everything away because now there's quadrants on wicks, okay, or anything else. You know, everything is complementary. It's a layered approach. Okay. Let me see the chat on forums. On the 4 hour. Market maker sell model. Yeah, it kind of depends, right? Because again, we're still looking like it's in somewhat bullish order flow, somewhat. right? We dug deep into a discount from this low extreme to the high. We still have this high to that low. It's right at the 50% if you look and see that, this high to that low. So this needs to be a balanced price range because it's an order block, pushing price higher. So that high to that low, look how perfect that was. We still do have this gap down here. So this is definitely going to be something important to watch. That's the new week opening gap from a while back. So again, if we respect this in here and it runs up here, fails to do much of a rally above it, you got this low to the high up there, right? Low, high, lower, low. What is that? These down candles. If this is a market maker sell model, if we do see that as a market maker sell model, the way that I'll confirm that is if we respect the suspension block as an inversion fair value gap and then start to displace, maybe overtake some of this, that'll set the stage for us to get down here. And if that is the case, like you said, Fritz, that may end up actually being a second stage distribution. Okay, because you got consolidation, accumulation, reaccumulation, smart money reversal here, right? Low risk sell or first stage distribution. And now we're working within, trying to see if we can get that second stage distribution. Higher time frame though, we gotta make sure that we're remembering that we're inside of an overall consolidation. It's nasty, very nasty on that monthly chart. We are inside of a monthly downtrend. It still looks like it's supporting the down movement. Look at what's reacting right here, right? We also have that quarterly fair value gap that's been used for literally months. Since we got into it, it's been referred to. It's refused to let price move. So we'll see. Is this going to be reactive? If we were to get up into here, right, and start pushing through this market maker sell model would fail. Right? Once that market maker sell model fails and we invert the suspension block, gets above that, we now are starting to see up candles get violated. And so up candles like this one and this one, if it was to basically invert this level here and react strongly to the buy side, and maybe we see the yields rally up as well from the lows down here in the same instance, overtaking this. If that happens, if that is what transpires, this right here and this right here becomes distribution back to the buy side, and then we would change our opinion from market maker sell model, keeping in mind the higher time frame, right? Hopefully this isn't confusing you guys, to then market maker buy model, right? Right. We may need to come down into here though. I wouldn't be surprised. And so this here's the daily order block. So getting above that, digging a little bit into that suspension block will create the change in the state back to the buy side again. Low, high, lower, low. This could be optimal trade entry given the fact that this is what the daily chart looks like. Again, we need to see, is this going to go up and then violate this low? That puts us in position to trust that we're going to have an extended, continued down movement. But right now, we're in a situation where we got to watch this as well. Because if it gets above this and then fails to break this low, it will absolutely try to run to the buy side. Because we're in consolidation on the higher time frame, this looks like it is a market maker buy model also from this big view, right? High, low, or accumulation, smart money reversal above this high, accumulate or distribution here, possible second stage distribution to try to get us up above this high in the daily time frame market maker buy model. What we just mapped out was this smaller view, showing you market maker models inside market maker models. A higher time frame view versus a lower time frame view, right? So, but we're in a situation where we may, we have to wait for more information to be heavily assured that price is going to continue longer term in one direction or the other. It could respect this and decline breaking through this low. That puts us in position to target the low down here again in some of these. But if it breaks above this, and then we see also the yields breaking above here and the bonds declining from here, digging down into these deeper levels over here, that is what would support this aggressively repricing to the buy side, intermarket relationship wise and structurally in the DXY. Because we then invert fair value gap, or we would reclaim the suspension block as a bullish PD array, right? Invert it, right? We would invert this fair value gap. We would trigger in the change in the state at a discount price level on this daily time frame. We would fail to complete the market maker sell model. And then that would set the stage and have a lot of confluence for us to then go higher. Right? I said August, September candles. Is the August and September candles a usable range as well for August? Oh yeah, no, this is the parent time frame that we're in. The thing is, we've taken out sell stops here. So look, we went from stops to stops, right? Stops to stops. If it was going to continue to drop and we weren't going to be interested in going higher, it would have went from stops being taken to inefficiency and continue to drop. But we went from stops, quarterly low, to stops aggressively. And we had a type 2 dealing range here. For those that know, we walked this whole entire thing as well. Right? But because it went from stops down here to stops, right? This is a sell side taken, buy side taken. So now we've been gravitating to the buy side. So because that's the case, you can outline this high to that low. That's the big parent range that we're trading within. But this is the consolidation, right? That's the Godfather range that we're trading within. This high to that low, right? So you definitely want to keep tabs on the equilibrium of that. You want to grade that as well, right? But on a day-to-day price action navigation, you got to have a way to get closer into price, right? With what's relevant right now. Doesn't mean that that's not relevant, right? Because you still want to map that out, right? You go from the high up there down to the low, and you get the full range being graded, right? So 25%, look at that. 25% of that range set up this move. 50%, we're trading down into the 50% of that move. Right? And then we're at 75%. Right? 75% is right there. Notice how it came up to 75% retracement. When you grade a price swing, the 25, 50, 75% levels are where you can anticipate retracements, especially if the 75 or any of these, three levels can be paired up with a PD array. Just to kind of clarify. Order block here. Fair value gap. There's a 50% level. There's a high also above that. Targeted. 50% level was met here. Declined. Set up a move higher. 75%. Price retrace back down to the 50% of this high to that low. And now prices it may continue. But we're in a level that we got to watch because we're in consolidation on that monthly chart. So I hope that the perspective makes sense. And I hope you could see how we're able to be flexible. I would like to favor, given what the yields are doing, if it continues to do this, I'd like to favor seeing the DXY eventually respect this and then change order flow back to the downside. we do have the high up here. So if we were to get up above this level here, I'm not going to be married to shorts. Right? If we get up above that, I'm going to invert that and then target buy side up here. This should be a low resistance liquidity run also. Right? So keep that in mind. Okay. So, and again, the stuff that we're doing here is like pre-indices analysis. And whatever we can determine here on these assets, what do you think is going to happen on the foreign currencies and the indices? We're going to have a very solid idea. You're able to go to those other assets and make a decision in minutes, because we have all this background information understood. Because the market's got to be symmetrical. They're going to move together. And if they're not, you're in a low probability condition, and you're probably going to take a loss, because you're not going to be able to confidently gauge where it's going to go with any reason. Just because you feel like it is going to do this or do that. And we don't go off of feelings. Feelings don't get the bills paid. Feelings don't make you win trades. If anything, feelings make you lose trades. So we got to have a rhyme and reason for the things that we're doing. And this is part of the way that you discover that is by doing this heavier risk on, risk off analysis. Okay. But yeah, so that's my opinion on the DXY, right? We'll see if this market maker sell model can work out, but this looks like the sell side of a potential buy model. So we're going to keep tabs on that. We do got the new week opening gap down here. On the previous week, so we're going to keep tabs on that, and we'll keep tabs on whether this market maker buy model unfolds. If this does unfold, this failure swing up here is going to be a very low resistance liquidity run, and it will rapidly reprice through that, especially if the yields turn around and they start making a move higher after we took the stops down here. This can easily just be a deeper tracement to hit this discount array to then send price higher. If it overtakes these levels, that's what will be the case, and that'll have a positive impact on this. But that may result in these, right? Just come over here to indices now. We'll just jump to that. I'll let you guys do the foreign currency analysis. Kind of already been going for a while, so I'll let you guys do the foreign currency analysis. Make that your homework. But yeah. If we do think that the DXY could potentially go higher, if it does go higher, that'll be negative for this. And this displacement here, if it respects this, and some of these other relationships show bullish DXY, right? Potentially bearish bonds and bullish yields, if that is what takes place and we reject from this fair value gap, that is a solid understanding, solid background correlation that can get us to be confident that this displacement here was a break in market structure, and all we did was come back, fill in some of this premium, offer a premium price to then try to target even further sell side. But we'll see, because if the yields continue to drop and the bonds, open up, drop, and continue to rally, the bonds, right? And if that results in this suspension block holding price to the downside and this market maker sell model continuing, and this previous new week opening gap gets targeted, this reaction from the daily fair value gap makes a lot more sense now. They pulled price to premium to then decline and smash price to the downside. And if that takes place, this will invert this daily fair value gap. It'll get above this wick in here, and we'll use it as a support level and continue to push price higher. We may even see this as a market maker buy model scenario. This was absolutely a market maker buy model. We traded this entire move. All last week, we were crushing it. Hundreds of handles every single day. Some of you guys in the private group, if you're here on the call, confirm that I'm not lying. If you could just type in, hell yeah, I was there in the chat, that'd be great. For those that maybe new or didn't get a chance to kind of listen in. But yeah, we called the drop and the rally. I had a couple students traded the sells, and we positioned with the buys, and we framed out like 6 different moves inside this craziness, while keeping the attention on this as a market maker buy model. Consolidation, manipulation, distribution. See Mike right there, Mike in the chat, he was there. It's amazing. Appreciate you, Mike. Yeah, Mike is one of the students that's on with me every single day. I don't think he's missed a day since he joined the private group, and it's amazing. I appreciate it, because the stuff that you get to see, I mean, it's amazing. It's amazing. It really is. It's like a candy store every day, even for me, just to see the stuff come to life. And it be so reliable. It reminds you what you're doing is, and what you guys are learning is absolutely amazing. You know, it's like, I don't know, undescribable, we could say, right? But yeah. So basically, you know, leading up to this point, all these things that we've talked about has got us to quickly be able to determine what price should potentially do here. If the DXY is going to respect this and decline, that should be complemented by this going lower and this going higher. And if that happens, we will continue to rip through this and invert this fair value gap. I think this is a daily wick, right? These are daily wick levels in here. I don't want to make it overtake the chart, right? We do have a 50% of the order block here. Notice how we beautifully came right up into it. Let me see, is it perfectly aligned? Yeah, it's that's perfectly aligned. It kind of failed to get there, huh? Oh, okay. This is a good idea. This is a good situation here. So this is the daily fair value gap here. You see the low. Price came right into it, but we failed to hit the full 50% of the daily order block. Why? Because the fair value gap's there. It didn't have to come up there. You know, it did not have to come up there, right? And then it reacted lower, and we stayed in consolidation. Okay. And again, we have this wick, we have all the quadrants. So watch the reaction within these quadrants. You want to keep tabs on, you know, some of these previous open prices and close prices. Of course, you want to keep tabs on the quadrants inside this daily fair value gap as well. We're going to potentially stay in consolidation here, right? We're going to have to wait and see what it wants to do, because right now we're stuck. And if it breaks outside of this daily fair value gap, you can be rest assured that we're going to target these equal highs up here. We're at equilibrium from this high to that low. When we're at equilibrium on the higher time frame and prices overlapping like this, you guys that have been here for a while should know that that is a low probability condition, and it's highly likely that we're going to be in consolidation. You know, it's going to be chopping back and forth, back and forth. So if you engage, you have to make sure that you are lowering your risk and you're not over trading and over leveraging, and your expectations are very, very managed. 20 to 30 points, which is what it should be in general. Okay. Any larger moves than that need to be put to the side. You know, it may offer it, right? Like inside this, we traded all week last week, bagging hundreds of points, right? In terms of the moves, like where they started and where they ended, you know, full targets being met. But, you know, I lead by example. So most of the trades I took were 30 to 40 points, you know, and they continue to rip. You know, some students caught bigger trades than I did last week. You know, Mike saw, right? But yeah, you know, we have our rules and we stick to them, you know, so consider these rules. They'll save you. They'll get you to profitability or consistency faster, I should say, consistency faster. It's easier to bag 20 to 30 or even 40 points than it is to bag 150 a day. You can imagine you can arrive quicker and have more forgiving experience if you bag 20 to 30 points or, you know, 40 points, whatever you're offered, versus forcing yourself to need 100 points a day. You know, you get to one way sooner. And the one that's less allows for you to be wrong. You may be wrong and price runs runs like 40, 50 points and it completely turns around on you because maybe there's something you missed. And if you were in the trade and it offered 20 to 40 points to you and you didn't even take $1 off, whose fault is it that you lost money? It's yours. There's no guarantee that you're going to be correct 100% and get the full move every time, especially if you're aiming for 100 points. Right? So it's a mindset. You have to make that adjustment with your mindset and what your expectations are. With the moves that we call run hundreds of points almost every time, literally, because what we're framing price on is, you know, important stuff. It's not just random pieces of price action, you know. So until you can grasp the whole dynamic of how those bigger ranges are secured, your ideas need to be limited, especially if you're in a range like this. If you're inside of a large range, inside of a consolidation, especially at the 50% level of a larger range, and if price is overlapping candles like this is the surest, easiest, most visual way to identify that we're in a low probability condition. If price is sideways like this, it's not willing to go anywhere, right? So if you push too hard, you're going to get caught in one of these wicky, you know, up and down type of days. And then you're going to zoom out and look at it and be like, damn, it didn't even really go anywhere. I should have just took the small amount that I should be targeting, which is 20 to 40 points, 20 to 30 points. Or I should have just stayed out entirely and just waited till, you know, like this gets broken so we get out of that range. In that case, you'd have an inversion for value gap here. And if we trade back into it, that should be an inversion for value gap. And it should go higher. And maybe that leads to displacement rather than choppy nonsense, right? Or maybe if price breaks out and takes out this low, maybe this wick will act as a premium array, right? And if price trades into it, maybe that becomes dynamic and we reprice down to the lows over here, right? Either of those scenarios, if you had to wait for it, much better than trying to force something inside this. Doesn't mean you can't trade in here, right? Because we did, clearly. We always, you know, find something. But just some things to consider, because I know a lot of new students come to this channel. A lot of new students, you know, see these videos and whatnot. So if that is you, if you're new, just keep that in mind. Those two things I just mentioned. If we're at equilibrium on a higher time frame and we're bouncing back and forth, or you look at price and we're in a consolidation like this, you need to be cautious. And it's lower probability. Right away, before you get any of the other more advanced ideas that I talk about. This right here is a very, very, very visually easy thing to apply and walk forward with. Okay. So yeah, we're kind of in a mode of waiting. We want to see what the start of the week is going to show us here. Are we going to respect these levels, or is it going to break above it and invert and go higher? All right. I would prefer, if the yields are going to continue to drop, I would like to see these levels be respected. I wouldn't be surprised though if we open up, rally up into this, and then start to go. That may result in this going lower to go higher. Right? If that is the case, this may give one more attempt to try to fulfill this up here to go lower, given the fact that, you know, this could go higher to go lower. And this is positively correlated to it. So that may trigger in this to run up into this a little bit further, then decline, fail the market maker buy model, but continue the market maker sell model, second stage distribution potentially here, and then quickly try to overtake this gap down here. We got this low first. Right, this is Thursday's low. Before that, we also have, let's see, we have Friday's low here. So Friday's low too. It's another thing we got to pay attention to, right? When you're on the monthly chart, you look for the most recent monthly high and low. Weekly, right? We look at the most recent weekly high and low, and one candle prior to it, and then whatever's close. And then if we're on the daily, previous day's highs and lows. And if we go into Sunday, Monday, Friday's high and low are going to be important. Okay? Friday's high and low are going to be very important. Because the next candle that opens, the first liquidity outside of the weekly that we talked about, right? The weekly highs and lows of the current week and the previous week, we have the Friday's high and low. So before it even gets to that, right? Those extremes, we got to break through this, right? The Friday's high and low, depending on what it does, right? We may open up this next candle on this daily chart, right? Sunday's candle may wick up above Friday's high and Thursday's high, hit the suspension block 50% level after sweeping those 2 days highs and that liquidity there, maybe even get inside this fair value gap as well, right, with this suspension block. And then wick that and then decline lower, targeting this market maker sell model. So again, if that is going to happen, right, we may see this open up. Price may, do a little bit of a decline slightly, maybe dig a little bit, but not really hang around too much and then rip their faces off to the buy side. Okay? And we're going to require a good amount for this to want to be fully interested in getting to the downside. But we're not going to entirely throw it off the bridge. We got these equal highs up here, though, so that's more of where my attention's at. And we took these lows out. So yeah, my attention's up here. So I'm going to continue to try to anticipate this for our indices. Okay. So yeah, I think I've kept you guys here long enough. Hopefully you guys learned some stuff. We talked about a lot of essential ideas to daily bias, understanding delivery and price, many different factors, mindset wise, and just overall, we talked about a lot of very, very important topics today. Essential tips, right? Just as the title describes, right? But yeah, if you guys have any questions throughout the day, let me know in the free Discord. Those of you in my private group, I will definitely see you guys tomorrow. If any of you guys need any help, just let me know. We could set something up for today. And yeah, hopefully you guys got value. God bless each and every one of you. Hopefully you guys had a good weekend so far and continue to have a good weekend. And yeah, with that being said, I will see you beautiful people here on YouTube on Tuesday. And those of you in my private group, I will see you guys very soon, right? Tomorrow morning. All right? You guys have a good rest of your day, okay?